Well, I think we're going higher. Could we hit one more spike low? Yes. Will we? I doubt it. I don't know. No one knows.
Yeah, it's a pleasure. Last video we had with you was a huge video, and you were talking about silver being below 20, and you were calling out the bottom. Now we're above 20, thank God. What do you think will happen now? Are we going higher or lower? What's your perspective?
Well, I think we're going higher. Could we hit one more spike low? Yes. Will we? I doubt it. I don't know. No one knows. But I did say months ago, one of the members of the premium service asked me, and we were like 22-ish, how bad could it get? And of course, I chart in front of the people and, speak. And I said, look,
Mhm.
1850 would be my exact number as far as, that. I shouldn't say exact number. It'd be an 18 handle, which means it could be 1812, 1887, or 1792. I'd still consider that to be called correctly. So I said 18 was the bottom, but in my technical work said it looks like about 18 and a half should be about
Mhm.
it. So far, so good, but I have to remind everyone there was I think it was 1817, and I'd have to look back at a chart to figure out what year it was. But I called that low. It was a typical silver low, spike low, waterfall decline of about 3 days, kissed the 1817 mark. I said, that's it. And it was
Mhm.
right for 14 months. And then it went below that. So not saying that'll happen this time. In fact, I'm emphatic it won't. There's just too much money printing, too many issues revolving food and energy and the war and everything else to take this market much higher. But let's want to pause for a second. I know this is probably not protocol, but I received that from Jean-Claude
Oh, very
Beyond
nice.
Mistake. It's 10 ounces. So
Hmm.
at $20 melt, I mean, that's a $200 gift. So thank you, Jean-Claude. I really
Nice.
appreciate your kindness there. And I haven't been
Where's our
on
gift, John?
before.
What the heck?
So it's more than a paperweight to me.
Yeah, no, that's a great one. You know, the lows off of, we were down in the lower 18 area. I think 1814, I'm looking at my chart, was sort of the lowest point it got about 2 weeks ago. And you called it, because I remember our video about a month ago when we were, right, getting there. You were like, hey, yeah, we could, it was like right just below 20 in the high 19s on our last video. And you're like, hey, we could get down to 18, but and then sure enough, it got down to 18 and then bounced hard from there. But it seems like what spiked this sort of, let's call it this recovery back, we're well above 20 now as we're talking here, was the Fed, after they raised interest rates by 75 basis points last week. In the conference call, or his press conference afterwards, Powell sort of hinted we might be slowing down in the interest rate increases
Right.
going forward. So I guess they haven't said they're pausing. They haven't pivoted. He's basically hinting, though, there's only so much more they can do with interest rates here. I mean, there's a limit, right, to how high they can raise rates without everything blowing up just because of so much debt in the system.
Right.
Yeah, I mean, we've been through this many times, not necessarily on your channel, but look, if they really wanted to keep the dollar alive for another 10 years, the only way to do that is monetary destruction, which means a lot of the funny money's got to go to money heaven and die. And the only way you can do that is to take interest rates above the inflation rate. So you got to get it to at least 10%. If you pushed interest rates to 10%, not only would you not be able to pay the interest on the national debt, but you would take the bond market into devastation. So I don't think that's going to happen. But to pause or, not crank them as high, maybe, 50 basis points, the market will read into that now and say, well, they're giving up. We're going to have a more or less hyperinflationary depression.
Mhm.
I mean, it's going to get to the point where people start spending their money for goods that they want to keep or preserve to keep their purchasing power. And the stock market in that case usually goes higher and higher. But like in Zimbabwe or Argentina or Turkey or any of these places that hyperinflate, just because the stock market's going up, people are better off in the market than they are in cash,
Right.
but they're not keeping up with the true inflation rate. And the only thing during the Weimar Republic that actually beat the inflation rate was precious metals. And I think that'd be the case again here. So if we were to have another, well, let's say big crank up in interest rates, maybe taking the metals down because the stock market says, oh my goodness, I'm not so convinced that this time would be the same thing. Meaning I've always said, if we had a big crash in the stock market, the miners would go with it, and gold and silver usually sell off as well. But the market looks ahead. So it could, I wouldn't say would, could be different this time, meaning you might get a slight blip down in the miners and gold and silver. I mean, just like, something, let's just say, for example, we're at 20 something now and it gets up to 21. And then there's this huge crash in the stock market. So silver goes all the way down to 1980. Well, that's above the 1814 that Jim just told us about. And then it starts off again. That's more what I'm looking for.
If the Fed is planning this pivot, because there's only so much they can do, they can only take interest rates so high without blowing everything up. Is this the time where people should be piling into gold or silver? I mean, the gold to silver ratio is what, over 90 right now. It's not really me, hey, we'll go silver. But is now the time to look at the mining stocks and silver again, or is this still too early? You got to wait for the Fed to, they're probably going to raise rates again in September, 25, 50 basis points. But then after that, is there really that much more that they can, I got to think that's got to be near the end.
Well, it is. And I'm sure if you plot it out on a graph and look at it from, a monthly chart basis or a yearly chart basis, you won't even notice it. So if they go, 50 basis points or 75 or even a full point, it may upset the markets for days or a few weeks. But I think that gold and silver will shrug it off, like I just said. And yes, Jim, I mean, people like me that are in the sound money camp or honest money or, an alternative to government currencies or however you want to frame it. The time has come. And what's interesting to me being in market 16 years old is, there's going to be a lot of people that love silver at 30. But now that we're doing this, show at 20, they're going to wait. Oh, it's going lower. It's going lower. And even if it does go lower, they won't do it. And the best way is to gain discipline is just do a dollar cost average or make a purchase and just forget about it. The problem is most people become experts in the sound money fiat system literally overnight, because it's not that hard to understand once you get that light bulb, once you get, that aha moment. Oh my God, they can just print themselves into oblivion. And that's the direction we're going. I need a gold, I do my own gold or silver standard. And it makes sense. But most people go whole hog, put in too much, buy the wrong kind, don't think about it. And then all of a sudden they've got all this, silver, and they say, wait a minute, it's going down in fiat terms. So take a good, take an amount that you're comfortable with to start. But yeah, Jim, what's going to happen in Ivan is that the run to gold, I think, has already started, but it's a walk. It's no one's noticing him. When someone walks by your house, whatever, I'm gonna look at him, but you don't notice. But if someone's in a full-edged sprint and there's a bunch of people following that sprinter like crazy, your eyes will get wide open. They say, wait a minute, what's going on here? And that's the kind of acceleration I expect to see in the next couple of years.